Oil prices inched higher on Wednesday after the American Petroleum Institute reported a significant draw in crude oil inventories. However, the situation has not changed dramatically. Oil is still trading between $72 and $78 per barrel. Moreover, even a more than 4 million barrel drop in stockpiles has failed to bring the asset closer to the upper boundary of the range. Perhaps today's data from the U.S. Energy Department will support oil prices. After all, analysts predict a drop in both crude oil and gasoline inventories. Gold once again attempted to reach $1,930 per troy ounce before falling below $1,920 per troy ounce, and this move indicates the prevailing downtrend, which suggests a possible return to the 1,900 mark. To gain value, the precious metal needs to break above the level of 1,950. However, there are no driving forces behind its rally. Moreover, a recent rise in gold prices has been driven solely by technical factors, while a bearish trend is steady and a large scale. There are several factors that contribute to the metal's decline. The main one is the tight monetary policy pursued by major central banks. At the same time, policymakers are determined to raise interest rates further, so gold may well dip below $1,900 per troy ounce in the near future. Meanwhile, the inaction of the Bank of Russia with regard to the ruble's continued slide gives rise to numerous questions. The main one is how deep the national currency can weaken. The level of 100 rubles per dollar no longer seems a distant target. In theory, the rate may reach 100 and even 120 rubles per dollar. However, such a prolonged advance in the dollar may lead to the overheated long positions and cause a sharp reversal of the price in the form of a technical pullback. The main reason for the Russian central bank's inaction is the balance of payments, which will not be reported only in late July. Until then, the regulator will probably do nothing. However, the ruble's steep depreciation will further raise public concern that everyone wants to avoid. More importantly, the excessively weak ruble is causing serious damage to companies involved in the import of goods and equipment, and these businesses have already been hit hard by Western sanctions and have spent a lot to reorient to new supplier and restructure supply chains. The Russian currency's further decline could lead to large corporate bankruptcies and leave thousands of people unemployed. So we want to believe that the Bank of Russia will start taking action as the dollar approaches the level of 100 rubles. In addition, the ruble's recent drop is rather emotional in nature. Fundamental factors point solely to the upside potential of the currency. The Bank of Russia is expected to raise its key rate again. Given the interest rate level is high, once emotions subside, the ruble will most likely gain value due to the disparity in interest rates. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. See you soon.